Hey guys, and welcome to this little trade recap of today's New York session live stream where we took a long ride here, letting it run all the way back into our high of day buy side liquidity. I received many questions about how did I anticipate this long all the way up into the high of the day. The answer really is simple. I didn't really. I was just, like I often say, going with the flow, what price is telling me. And at this point in time, everything led me to believe that going long is the right thing to do at this point in time. I could have been wrong. And then that's why risk management is so important. If I wouldn't have seen, let's say, for example, this 935 candle, if that 935 candle wouldn't have done what it did and closed where it did, I would have been out of the trade again. So let's break it down and let me try to explain that narrative. So we have seen this London session sell-off, and then we started basically a 5-hour long consolidation all the way until we broke out, 5.5 hours actually. We continued lower and lower and lower. We had a set of 3 perfect equal lows here on ES paired with a 5-minute bullish fair value gap, and we actually left behind a 4th low right there. Eventually, just before the New York Open at 9:20 a.m., we sweep that low. And what do we do after we sweep that low? We don't continue lower. We respect, first of all, this bullish fair value gap, but that very next candle, that 925 candle, moves away from it, a bullish engulfing candle. Not that it's significant that it's a bullish engulfing. I just want to, I want to try to explain how I came up with that split-second decision to enter long after I saw that volume imbalance. So it's 925, New York opens up. I don't usually enter right on this candle, so I wait for it to tell me what it wants to tell me, reading price, and it keeps on pushing. It kept on pushing after initially continuing lower. We also saw SMT divergence with NQ that also painted the picture for me. And then we closed right here. We were watching this on the live stream. It initially looked like we're going to close above, but we didn't. I really wanted to see it to close above because then I could have labeled this as a official inversion fair value gap and then enter long based on that. But the volume imbalance right here at this point was good enough for me to enter in on the long, because sometimes, like for example today, you might ask yourself, why did he enter before the market structure shift ever formed? Well, I used to really only enter long once we have a valid bullish market structure shift, and it makes sense, especially if you're just starting out. But once you've really mastered your craft and you're in tune with price action, then it's, in my opinion, not really necessary to always wait for that market structure shift, because sometimes it holds you back, like in today's example where we just run. And when does this usually happen? Well, we consolidated for 5 hours at the low of the day. We took major equal low sell side liquidity. We had SMT divergence with NQ. We cannot always expect or anticipate price to reverse to give us an opportunity to get in. That's simply what happened today. And to add to that, we didn't just have that volume imbalance after closing right at the high and also above the consequent encouragement of this bearish fair value gap here. We already started to negate this bearish fair value gap right here after closing above it. Right here. Also used to be a bearish fair value gap until we close above, but we never really came back to revisit it. We had unfilled or uncleared buy side liquidity above at all of those short-term highs that we eventually cleared. And at this point in time, I was really curious. I did not anticipate price to run all the way back into the high of the day. I have to be honest. I did not anticipate it at all. But after we continued to expand and we saw really NQ showing some more strength, almost back at the previous day's high at the same time, I considered, because we had news coming in at 10 a.m., consumer sentiment news, how this could happen. And then we started talking about market makers on a live stream, and I asked the question of where the money is at. All right, imagine Asia traders and London traders, they had the opportunity to get in short at the high of the day. If we use the volume profile tool, we can also understand that narrative a little bit better. Let's just look at this consecutive downtrend right here. The volume point of control happened right here during this little sideways movement or consolidation before we dropped at 4 a.m. to continue lower into eventually sell side liquidity. But the majority of the volume has been transacted right here. And if we look at the volume point of control around this area, we see that the volume we've put in place right here, where traders jumped on the short, compared to the volume we've put in place right here at the New York midnight level, this dashed line from the ICT All-in-One indicator, the volume out here has been much higher. And if we look at the entire Asia session up until this drop, we can see majority of the volume has been transacted here. So just based on a dubious speculation, I would estimate that traders might still be short. They might be hoping it's going to reverse from here of a 1 hour or higher time frame bearish fair value gap, continuing lower, because it can't deny that fact. It really looked like we're going to continue lower today. Even I thought that at the beginning, and I was looking for a fake out shooter swing. But once I saw the power of this move, and then I started to think about, okay, where's the money actually sitting at? Is the money below here? Not really. Market makers accumulated positions down here. Every time we took a low, we immediately have been bought back up, bought back up, bought back up, trapping shorts into the market right here, accumulating. But the volume point of control of this entire move up until 4:05 a.m. still sits up here. So this tells me that money is still above. Market makers think about, okay, how can we make the most amount of money? Well, traders right now are position short. We want to liquidate them and basically take their money. So at this point in time, we were waiting for the news candle to drop. I secured one lot, one position size after a 5-point profit target has been hit. And then I waited for that news candle, still in with one contract. I looked at potential support of this bullish breaker block right here, paired with the now confirmed market structure shift, to potentially hold us to deliver into the high of the day, just based on knowing that Asia and London traders might still be in profit, hoping it's going to reverse on them. There's not much. Of course, there's liquidity below, but market makers accumulated here. This is the accumulation we spot, and then we move away very aggressively from that. We know some traders might still be in profit up here. That's where the money is at. Once we clear this, of course, we can simply drop 10 points again, and we can liquidate all those trapped longs. Because once again, if we take a look at the volume profile just off this move to the upside, majority of the volume has been transacted right here and right there. Barely any volume at all down there, just relatively speaking. So those traders are now trapped short, especially the ones that got in right here around this area. So we take buy side, then we reverse, trying to get those people to exit their positions or to force liquidations, continue lower below the volume point of control, but also very quickly, because what would happen if price would decide to slowly walk its way to the upside, higher highs and higher lows, that would leave traders that entered up here in doubt that their short is still going to work out. That's why we see this aggression, because this move comes all of a sudden. Just before the New York kill zone, the chart looked super bearish, even on the higher time frame. We had a big, massive 1 hour bearish value gap here. Everything pointed to bearish, at least not to continuation to the upside, if you were a higher time frame trader. And that's really the thing here. If they would slowly take price to the upside again, they would lose potential. They would lose out on money. They would miss out, because then these shorts would start to second guess themselves if that's still the right play, if they are still in line with the market, and if their stop above here and above here is still protected. Well, if they move the market up slowly, giving enough traders to get a chance in to get long basically, and to exit their positions at break even or with a small loss, they would lose out on money. It's as simple as that. That's why we shot up Here's another great example of how you can use the volume profile to your advantage. This is last week's NFP Friday, or was it? Where we had some news at 8:30. The idea stays the same. So we move up the entire day. Question is, where is the money at? The money, the volume point of control, money is being trapped right up here. Traders are trapped long. They went long right here with their stops below this low, below this low. Early Asia traders are also in profit. Wherever they got in during the Asia kill zone, they have been in profit up until this point where we got the 8:30 news. So now market makers are in front of their screens. They know where the money is at. They know if they bring price to exactly this level, how many millions they will make. So how can we identify or maybe get ahead of the market makers? It's by understanding where traders have been trapped. Price is a marketing tool. Prices continues to go up, and the higher it goes up, the longer it does that, the higher is the chance that we eventually jump in on the long, ending up being trapped volume. So, who paid for those people, or who paid the market makers once they hit this level? What happened at this news candle? Well, it certainly liquidated all the trapped longs from up here, from the Asia session. And how did it do that? Very quickly. If it would have done that very slowly, it would have offered those traders a chance to get out at break even. It's really important to understand where is the volume point of control sitting at and who's been trapped. Are longs trapped at the high of the day? Are shorts trapped at the low of the day? Like for example today, if we bring it back to today's price action, where are we at? Right here. Where's volume trapped? Initially, yeah, right up here. And we move away with momentum of that area. Alright, now traders try to anticipate the continuation short because a higher time frame certainly looked like we're going to continue lower. Even right here, I couldn't imagine that many traders traded off that 1 hour bearish to a value gap going short right here. So where's the money? The money is sitting right up here. Of all those trapped traders or higher time frame traders that have their stops just above this high, they already accumulated down here. They don't have any interest at all to bring price below their accumulation zone. They already accumulated, scooped up enough contracts down here at this area, and then they moved away with aggression, selling it at a premium, buying in a discount, selling at a premium. And that's how it's done. So I hope this video was helpful to you. Maybe at least you learned how to use the fixed range volume profile. So the way I use it, I look at specific either time periods, let's say for example the entire trading day up until the New York Open, like for example this one right here, to ask myself the question, no, that's not the volume profile, right here, up until the New York Open, 9:25. Where's the money at? We have the volume point of control. This really tells us a lot. Alright, accumulation happened down here, done. Who's in profit right now? Who is in profit? That's the most important question. Because very likely they're not going to stay in profit for a long time. And that's what happened today. Very quickly, without any notice or whatsoever, they hunted them. They hunted their stops. And that's how you can use the volume profile to maybe understand of, okay, where's the money at? Who is being trapped? If you don't know where the money is at, I really like and suggest you to try out the volume profile. Of course, you won't get it on first try, but you can go back through historical data and actually look at the volume profile and the different shapes of it. If you start to recognize specific patterns like a P pattern right here, where most of the volume has been transacted up high and barely any volume compared to this one right here to the downside. And then the question still is, how can we use the volume profile to use it to find entries and spot entry opportunities? And like right here, it's a rare scenario where we have a massive trend to the upside without any NFPs, CPIs, news events like that. On those days we usually continue, at least most recently, continue to trend up higher. But right here on a regular day we only had 10 a.m. news, consumer sentiment. We had this push to the upside. The majority of the volume has been transacted right here. So then we ask ourselves the question, where's the money at? Are they going to make more money if they move prices higher? while all the retail traders piggyback on that trend because that's the existing trend. Prices goes higher. So I'm going long because I'm going in with the trend. Well, looking at the volume profile, that sort of tells you a different story. We have plenty of volume inefficiencies and price inefficiencies right around this area. We have a other high volume area node right here before the news candle, before we went sideways. And then, yeah, well, also a little lack of volume right here within this area. So, who's being trapped? Well, longs. What's easier? How can we make the most money? Well, not if we continue to the upside. Then we would just allow other retail traders to piggyback and not work out. So right here, we actually saw a SMT divergence between ES and NQ. You can see that NQ didn't make this higher high, while ES formed this higher high. That's sign number one. All right, we have our volume being trapped up high. We have SMT divergence, and we just collect confluences. We have our bullish fair value gap here. So if price is really that bullish, we should expect or anticipate support on this bullish fair value gap to continue with the trend. It's the only bullish fair value gap within that most recent price leg. All right, but what actually happened? We closed right at the low, doji, and then we closed below it. And what do we get here? A volume imbalance. So at the latest point to get an entry, where are we at? Short position, right here on that volume imbalance. Stop can really go just at this candle's high. If we immediately see this candle snap back after taking sell side and closing somewhere in here, yes, of course, this is a inversion fair value gap, but really we would look forward to target lower prices and to fill in at least our first volume inefficiency. And if we are right about volume being trapped long and we think like a market maker, then the answer is really simple. Why even a smaller stop loss shouldn't be an issue if we get in right here. Of course, we don't catch the top. We're not really looking forward to catch the top. We collect data and information, confluences before we actually enter. We get our volume imbalance, and theoretically knowing that the volume is being trapped up high, right up here, and in the bigger picture, also up here above our current high of the day, above the previous day's high, would it make sense for price to walk all this way back to the upside if we think like a market maker? Well, not really, because this would offer these longs an opportunity to get out at break even or with a small loss. It's as simple as that. So who's going to pay the market makers right here once they take profit or take partials? Well, the trap volume up high. Trap traders. We know they're trapped because we have volume point of control up here. Volume being transacted right here. We see that off this most recent price leg. Volume profile. Let me actually get rid of that. And where do we start to bounce? Well, volume inefficiency, our next high volume node, and paired with a bullish fair value gap. So I just want you to try to play a little bit with the volume profile. And yeah, if you want to watch me using it live and explaining it while I'm actually trading, feel free to join my free live streams. There's going to be 1 or 2 more live streams this week basically, on Thursday and Friday during the New York session starting at 9:30 a.m. New York local time. Alright guys, thanks very much for watching the stream, and I will be back tomorrow for the New York session live stream. Bye.